Hi and welcome to the Market Alert for Friday, the 15th of July 2022. So banks dump, Bitcoin pumps, bullion slumps as inflation-recession battle builds. Is it that time already? And I love this graphic here where it's got the compass and it's pointing to pivot. And I think we're fast reaching that point, probably around September for me, where there'll be no more rate hikes and they will have to go for rate cuts and start printing again. But only time will tell, particularly going into the midterm elections in November as well. So yeah, the pivot's not too far away. Producer price inflation unexpectedly surges back to near record highs in June. What do you mean unexpectedly when everything's going up around us? Get back to work, Mr. Powell, i.e. a few more rate increases should sort this out. Is what's behind the sub there. Stocks and crypto surges fed while a jawbones 100 basis point hike off the table. They can't make their minds up, can they? We've had this for 2 days now, whether they're going to increase by 100 basis points or not. They're trapped. It's as simple as that, isn't it? They're trapped. They don't know what to do. Futures tumble as dollar hits record high. JP Morgan Stanley slide. Yeah, I mentioned this yesterday about the dollar going through the 108, whatever it was, in yesterday's market alert for Wednesday's trading session, and it did that. We'll see that when we get to the dollar chart. Here comes the violent summer of soaring dollar discontent. Yeah, absolutely. It's going to be a very interesting one this summer. And economic news for today, we've got core retail sales out, retail sales as well. And then we've got FOMC bullards out later. So again, there'll probably be more jaw-boning about whether they're going to increase by 100 basis points or not. And prelim UM out at 3 p.m. So all US news today. Again, all inflation related. Gold-silver ratio continues to move higher. This is a monthly chart, and the reason is I want you to see that got a lot more on the upside yet if they want to continue to slam the price of silver. 93 is the current gold-silver ratio. It's incredible. But you'll soon see this fall out of bed as we did in the 2020, summer of 2020. They ramped the price of Well, they didn't ramp the price of gold. They slammed the price of gold and silver into March 2020, taking silver down to $13 an ounce and then brought it back to $30. And that's what happened when you send the price up. Silver goes up faster than gold. And that's another reason why I am very much interested in silver. I have been since I started trading in 1991 when I was trading silver options on the COMEX exchange via a brokerage firm in California. And that was the days before the internet as well. I used to have a 0800 number to actually trade. Wow, that seems like a long time ago. Okay, let's have a look at the markets. We'll kick off with the Dow. Yesterday, the market moving down sharply, 78% retracement. And that's from there, drawn back to there because we're taking out the lows of yesterday. So, managing to bounce yesterday, and again it was brought back as the headline says on the jawboning. We saw the market sell off sharply, and then we saw it come back. And whether it was the words of Waller or Wally Brain, who knows? But it could also have been the plunge protection team bringing the market back. But we're currently struggling overnight. I wouldn't be surprised if we don't see the market move back to the downside, to be honest with you, during today. So in the 30-minute chart, I'll be drawing up some lines, seeing what ties in with the DP levels. We're already through the 20 bar and the 5 bar. The 50 is just finding a bit of support there. So I'll be looking for any sort of rally that's overbought, oversold, etc. To try and establish some positions there. In the German DAX, similar picture here. You can see the market retracing 89% for yesterday and holding there as well, but looking weak overnight as well. So watch these two levels, see if they're taken out. In particular, watch this level that was put in place on the 5th of July, this low here at 12. Let's just have a look at that, 384. Watch this level. very closely if we start to see the market move lower again today. You can see how it came off the lows yesterday, the close pretty high, and then also we've got an increase in volume there as well. So in the 30-minute chart, the DAX looks like this. We came down to begin with. We had one 30-minute bar up, and then once we got below the DP and the close and the averages started to sort themselves out, it just stayed in the same direction apart from one green bar to the downside till, like I say, Waller came out, made his comments, the market moved higher, retraced, and then moved back up. And you can see there in the 30-minute chart, not too dissimilar from the Dow, the market is currently struggling there with the DP level, and is also below the 3 averages already, 4 actually, because the 200's up here as well. So looking fairly bearish. Your first downside targets will be here, and if we get through the 89 here and the low where we had demand at the 20 bar moving average yesterday, then we'll move down to here, and if that is taken out, then we'll move down to here as well. So you've got all of these areas, and you just remove them as the market goes through them. Like I say, I've just put those on there just to show you what I'll be doing, but we'll start with this one. You can see we're getting close already to 78% retracement, and that's why this low will then become important, and if that's taken out, then we'll just move accordingly and just keep drawing them in. In the 5 minutes yesterday, well, you can see what happened there. The market down in the futures, and now 30 minutes up in the 30-minute, you can see there. And then we got to the DP. Again, the average is all starting to switch, and we went red, and then we just made our way down with overbought, oversold conditions in the stochastics. And then eventually we see the support coming in, and the DAX then moving to the upside. Yesterday's trades were great. Let's just have a look for the week. We're looking at 68472, 64 to 36 win to loss ratio for the week, a profit factor of 2.33. And then the total is still at 234 and still at 55.45 for the win-loss ratio there, and 21,005 to 1 in profits. And in the S&P, very similar to the Dow, you can see the weakness starting to come into the daily chart. There's your areas to watch out for. In fact, from here, projected back was the actual 89% retracement. Yesterday was the low for the S&P, that 89.3718, and in the 30-minute chart, you see the sell-off down to the S1, climatic volume, and then bring the market back. The market is above the DP, it's stronger than the Dow, and you can see it's struggling with yesterday's high though, and trying to move to the upside. The strongest market of them all is the FTSE, still despite the political uncertainty. You can see the market getting slammed yesterday, but coming off the lows down to 89%, 7,006. 7,000 is a very important level, which is why you're seeing all of this activity at this level. And there you can see the move to the downside, a big move to the downside for the FTSE, but we became oversold, and then got the 62% retracement, and then started to move the market back. But just like the Dow and the DAX, the FTSE is struggling with the DP level at the moment, and moving lower just at the moment, currently trading below the 20 bar moving average. It's also already below the 20 and the 50 and the 200 there, so watch out for the retracements on this one. Again, I would start off here and then move through the other lines that we've got to add those fib retracements in as the market, or if the market goes through them. Of course, we could always see the prices move to the upside today as well, and to look at just one side of it. And in the yen yesterday, moving sharply to the upside, struggling with the 89% retracement there in the daily charts. the activity inside, though, you can see straight off the DP yesterday on the overnight in the morning session, and then being moved to the downside as the dollar came on stream and moved to the upside. The pound also down again yesterday, but coming off the lows. This chart doesn't look right. Something's not right with this chart. No, it's not correct. Let me just reload this chart. That looks better, and that's what I was looking for. There's got to be some sort of demand for the type of price bar that we had, because it's come off the low. Still looking weak though. If we go to the 30-minute chart for yesterday, it was very, very choppy. We were overbought, and then the market down. You see the buying coming in there and then moving it back to the upside. But it's a bigger time frame trade, this one. As you can see, we've been falling out of bed since the dollar took off. 117, we got that 114 down here, which is going to be really important, which goes back to March of 2020. Like I say, everything happened in March of 2020 with the markets, of course, because of the global shutdown. So 89% retracement is the 117 level there. And finally, in the metals, well, you can't say that I didn't warn you. Silver crushed yesterday. Despite the fact it was starting to look fairly strongish the day before, which I also mentioned. Well, they made a good job of that yesterday, didn't they? They came in and absolutely crushed the price. And the reason, if you look at yesterday's market alert, when we spoke about the dollar, I said that the 108.38 was going to be taken out. And I suspect today we're going to see the 109 taken out. This is starting to build up a lot of momentum on the upside. This is going to continue to put downside pressure on the metals markets, and $16.33 is the next downside target for silver, if it can get down to that level. Certainly yesterday's price action is climatic in the actual spike down, and reminiscent. We just go back to March of 2020. You'll see what I mean, because this is how it always seems to end all these down moves. There's another one there where we saw climatic action. You get these spikes down, but the March one is the most. There you go. That's when they slammed the price down to $13, which was great. I just took advantage. We were all locked up at the time, and took advantage of buying some very cheap physical silver, because the gold-silver ratio at that time had also spiked to what I showed you earlier, to the, you see there, to the 125. So it was 125 ounces of silver to one piece of gold, or 1 ounce of gold. So, watch for these opportunities, because eventually they will have to let it go, and it will go to the upside. As soon as they start to cut rates and the dollar starts to tank, then there's going to be a massive shift into the metals market, because inflation will still be there. There won't be, as we said at the outset with the pivot, you won't be able to, they can't combat inflation because they can't increase interest rates above the cost of the increase in goods. That being the case, now they're going to try and save the economy. They'll make one more gesture and increase the rates by 1% Then the economy will go to rats. You've got the midterm elections. They'll have to start printing again and cut rates. And when they do that, it's over for the dollar. And everybody will shift to the metals, because there will be stagflation. You've got increasing costs and an economy that's not going anywhere. Anyway, back to silver. So yeah, it's not over by a long shot yet on the downside. I have had orders in and I've cancelled them as the markets move lower. Because of what's happening in the US dollar. Everyone's moving to the dollar. Europe's got a whole stack of problems as well. I see Draghi tried to resign yesterday, but the Prime Minister of Italy wouldn't let him. Another criminal destroyed Europe single-handedly with his QE. So yeah, watch the dollar. Watch the dollar. So the dollar goes up. Gold and silver are going to get hammered. This is gold. You can see same thing there yesterday, and 30-minute chart. But the 30-minute chart of silver yesterday was just a cascade of selling there to the downside, which you can see they just took full advantage of it and absolutely slammed the price down. As you can see, they're over a full dollar yesterday. Market finding a bit of support, but it's not over yet. Watch the low as we get into the 1 p.m. fix as well. Okay, let's end it here and have a great weekend. And as ever, thanks for watching. See you in the next one.